Hello students, let's proceed with our subsidiary books. Now we have already seen all these cash books where all the cash transactions are recorded. Today we'll see all the books which are maintained to record all the credit transactions. There is a purchase book, purchase return book, sales book and sales return book. Now in purchase book we record the entries where all goods are purchased on credit. Purchased goods which are returned are recorded in purchase return book. All the transactions of goods sold on credit are recorded in sales book, and all the transactions where goods which are sold on credit are returned will be recorded in sales return book. And we'll also see what are the other entries which are recorded in journal proper. So let's see the purchase book first. This is a format of purchase book where we have the date column, then the name of the supplier, then the next column is inward invoice number, wherein we record the number of the bill, ledger folio column and amount column. Now students, in purchase book, we record all the transactions where goods are purchased on credit. And while recording the entries, we record the entries at net value. That is after deducting the discount. So students, remember, if there are any cash purchases of goods, they are not recorded here. If any asset, stationery is purchased on credit, even that is not recorded here. So we record only credit purchase of goods in purchase book. Now let's take some examples here. On 4th of April, purchase goods worth rupees 4,000 from Manish. So let's record this transaction. In the date column, we'll write 4th of April. In the particulars column, that is name of the supplier, Manish, and in the amount column, rupees 4,000. Then on 5th of April, purchase goods from Sonia for cash rupees 12,000. Now here in this transaction, goods are purchased for cash, so this will not be recorded in this purchase book. Then on 7th of April, purchase goods worth rupees 10,000 from Ajay at the rate of 10% trade discount. Now while recording this entry, first we'll have to calculate that amount of trade discount, deduct and then write the net value. So 10% on 10,000 is 1,000 rupees. So the purchase value of goods is 9,000. So we record this entry as 7th of April 20 will be written in the date column. The name of the supplier we write Ajay, and in the amount column we write 9,000. That is after deducting the trade discount. Then we see purchase return book. Sometimes goods which are purchased may not be as per the specification or as per the sample given, or it may not be as per the required quality. In such case, the goods are returned back. Now these goods which were purchased on credit are returned back will be recorded in purchase return book. The format of purchase return book is, we have the date column, name of the supplier, debit note number, ledger folio and amount. Now when such goods are returned, a debit note is prepared. This debit note contains the details of the goods returned, and it also states that the supplier's account is debited. Let's understand this with the help of an example. 15th of April, goods returned to Rani rupees 500 via our debit note number 10. So when we'll record this entry, it will appear like this. 15th April in the date column, Rani in the name of the supplier's column. Then the debit note number 10 will be recorded in this column debit note, and amount rupees 500 will be recorded in the amount column. On 18th of April, return goods to Ashish rupees 1,200 via debit note number 11. Now this entry will appear like this. Then let's understand what is sales book. When goods are sold on credit, we record those entries in the sales book. The format of sales book is the date column, name of the customer, then outward invoice number, ledger folio and amount. The students, remember, only credit sales are recorded in sales book and we record the sales at net value, that is after deducting the discount. Now here also we do not record cash sales nor do we record any asset sold on credit. We have to record only transactions related to goods which are sold on credit. Let's take some examples here. On 5th of April, sold goods worth rupees 2000 to Jagdish. Now in the date column, we'll be writing 5th of April, name of the customer Jagdish, and in the amount column 2000. Then on 7th April, sold goods worth rupees 8000 to Pranita at 10% trade discount. Now here again we have to calculate 10% trade discount on 8000, that is 800 rupees. So from 8000 we deduct 800 rupees and write the net value. 7th of April in the date column, Pranita, and in the amount column we write 7200. Now on 9th of April, sold goods to Manali for cash rupees 10,000. Now here goods are sold for cash. So as you know, cash transactions are not recorded in sales book. So this transaction will not be recorded. Then we move on to sales return book. Sometimes the goods which we have sold to a customer may not be according to their specification or as per the sample, or maybe they may be defective. Then the buyer may return back the goods. Such goods are recorded in sales return book. The format of sales return book is date, name of the customer, credit note number, ledger folio, and amount. Now if the goods which are returned are out of cash sales, then they will not be recorded here. Goods which are sold on credit and returned will only be recorded here. Now when the customer returns such good, a credit note is prepared. This credit note contains the details of goods and it also states that the customer's account is credited. Let's understand this with the help of an example. 10th April, Kunal returned goods to us rupees 400 via a credit note number 8. So this entry will be recorded. 10th of April will be written in the date column, Kunal. Then the credit note number is given. So we write the credit note number in the credit note number column and 400 rupees in the amount column. The next transaction, 13th April, Dheeraj returned goods worth rupees 1000 via credit note number 9. So this transaction will appear like this. Then journal proper. The transactions which do not find any place in any of the special journals are recorded here. The format of journal proper is same like the journal entries. So here, these are the journal entries which you have to pass for those transactions. Now what transactions will be recorded in journal proper? These are some of them. Purchase or sale of asset on credit. That is, if you have purchased any asset or sold any asset on credit, then this will be recorded in journal proper. We have to pass a journal entry for the same. If goods are withdrawn by proprietor, then bad debts which are written off, loss of goods by fire or loss of goods in transit, goods distributed as free samples, all this will be recorded in journal proper in the form of journal entries. Discount received and allowed on cash transactions. For the amount of discount, we have to pass the journal entry which will be recorded in journal proper. Then the opening entries, adjustment entries, rectification entries, if there are any errors and we have rectified those errors, transfer entries, all these will find a place in journal proper. So students, I'm sure you have understood all these concepts which I have explained in this topic. Now we'll solve sums which will help you to understand this topic much better. That's all for today. Thank you.